Well, let's get to our next guest then. We have Mr. Vivek Sharma, the Executive Chairman of Cohance Lifesciences, who joins us on the show. Hi, Mr. Sharma. Thanks a lot for joining in and good to have you on the show. Before I come to you, just highlighting the broad points that we're going to be focusing on for the next few minutes in this interview. The promoter offloaded close to an 8.9% stake in an upsized block deal. So some clarity on that front. The company's response to the US FDA Form 483 with 6 observations. And finally, the broader outlook for the sector, right? What are the opportunities in the CDMO space? So all of this is top of mind. Well, so let's get to the first data point itself. The promoter entity, they went ahead and they sold close to an 8.9% stake. Obviously, they still have a large holding. Give us some clarification on that front. Is there a plan to sell some more? Is there a period that they will not sell? And what is the holding ultimately that they're comfortable with? Please give us some clarity.
No, thanks for having me. Good morning. Advent still remains after the sale as our key anchor shareholder. After the sale, they are at 57.5%. The intent of the sale was to broaden the investor base by bringing in top quality institutions. And importantly, Advent has chosen a longer term lock-in, which reflects their stronger conviction in the business. So I would view this as a positive, trend. The strong demand from institution highlights a strong conviction in the business and the management team.
Right. So no more sale is what we are looking at. You're comfortable with that holding as of now. They're done for the time being, right?
So I can comment on their behalf, but that's my understanding. I think, right now they're committed to the business long term. And as I said, we are excited as management team with the broadened shareholder base and excited to work with the Advent team. Yeah.
Okay. All right, Mr. Sharma, I'm going to get an Ekta as well. She's joining in for this interaction. Ekta, take it away.
Yes, absolutely. Mr. Sharma, hi. Good to see you in. The 6 observations that you received for your formulation facility in Hyderabad, I know it doesn't contribute that much in terms of revenue as well as EBITDA as a total, but what is the nature of the observations? When do you expect a resolution for this particular facility?
Sure, Ekta. Hi, good morning. So a few things. Yes, we did receive 6 observations. We had 2 US FDA inspections actually in the last few months. One of them we received 6 observations. The other one was also on our API site in Jagiapet, where we received 0 observations. On the one that you are referring to, there were 6 observations. This is a site that produces drug products. And yes, as you mentioned, the revenue contribution from this site is less than 2%. EBITDA contribution is less than 1% of our total revenue. This was our first inspection actually under the Cohance ownership of a US FDA. The nature of observation is around some material management controls, some cleaning procedures, and some internal processes. As a company, we are committed to the highest level of quality standards, highest level of processes, and we have started working on the remediation of those actions. While we are doing internal processes optimization, internal processes things, we have also retained services of a US FDA accredited agency to help us with those cleaning up processes. We have sent a response to US FDA as per US FDA guidelines, and there is a timeline that within which they are supposed to respond. While we're waiting for the response, everything that we need to do, we have started working with proper procedure control and help from some external resources.
Okay. All right. So we don't expect too much of a concern from this particular formulation facility in terms of escalation. Just wanted to focus on the opportunities which are emerging in the CDMO space. And one of the key things that I wanted to talk about was the US Biosecure Act. We understand that it is back under consideration in the US. It might be a more watered down version from what existed before. But the fact is that there could be an opportunity which could then re-emerge for Indian CDMOs or, CDMOs ex of China. Just give us a sense in terms of what kind of opportunity are you anticipating? And is that already playing out with regards to China Plus One for you?
Right. So listen, as a company, I have said this in the past, as India, I'm very excited and, very optimistic about India's potential in the CDMO space. I think India has a lot to gain and India will continue to evolve and continue to grow. That's my own projection. From a Biosecure Act perspective, the act was being put on the floor, I think December last year. It did not pass. Now it is being pushed again. Generally, my observation, meeting with customers, meeting with other key holders, is that listen, the damage is done. People are looking at as an alternate to really have a backup and then move out of China if that is part of their supply chain. We are seeing improvement, and we are seeing RFPs that are coming now that were not there before, and they're in larger quantities, compared to what it used to be before. We are seeing more visits from customer to evaluate our sites and capabilities. So trend-wise, I am seeing traction there. In pharma, it's a very sticky supply chain. It takes time for it to materialize. I can also tell you in my interactions with customers in the US and other places, depending on company's strategy, there are companies that have a China-free strategy. So people are looking for opportunities to really de-risk their supply chain from China wherever it makes sense, and we are seeing traction in that space.
So you have spoken about the RFPs or the request for proposals, as well as the site visits which have taken place. You've, spoken to your shareholders about that in the past couple of quarters. So give us a sense in terms of how much of these RFPs have actually converted into business for you all when it does come to the CDMO China Plus One opportunity.
Right. So, so yes, there have been some RFPs that are converted, but we have a large number of them that decision is pending. It's a complex process when an RFP is involved in a phase 3 and a commercial product. It takes a long time to understand, to really work on it, to price it, to share with them and for them. So that process is going on. I want to just give you an example. One very large pharma company has given us RFPs 3 times in the last 45 days. The first batch of RFP, we have submitted the prices. They are evaluated. They have come back with some negotiation. We are discussing with them. The second batch, we are working on submitting. The third batch just came in last week. So even the first batch that was submitted more than 40 days ago or something like that, we have not heard back. They are still internalizing, evaluating. So it does take time. I'm very optimistic that the fact that they are evaluating and there are more RFPs coming, we will see traction from there. So it's all moving in positive direction.
Okay, so you've had one innovator company reach out to you in the past 45 days for 3 RFPs.
More than 3 times. First time it was and I don't want to give the numbers yet. It was a much higher number of RFPs, but it has come in 3 different batches, 3 different stances.
Okay. Is this for the ADC opportunity?
All of this, and the one that I'm talking about, is non-ADC. This is small molecule, but they are phase 3 and commercial products.
Okay, but ADC itself, anti-drug conjugates, which is basically a type of cancer therapy, it is expected to be the big opportunity for you all and for the market itself, $4 billion by, say, 2029, 2030. So give us a sense in terms of the kind of opportunity you are seeing from ADCs.
Yeah, sure. So yes, you're right. ADC is a big driver of growth for pharma services, including us. And we have 2 sites, one in Nacharam in Hyderabad, where we provide commercial payload to commercial customers in the West and in Asia, and then the NJ Bio site, which does early stage, linker conjugation. So we are seeing significant traction there. This is all at discussion stage at our Nacharam site, where we are talking to other customers which are working with on some early stage products. So existing customer is looking to extend the therapies, and if they expand, then we will see traction there. New customers are working on early stage projects based on our camptothecin-based technology, and if they progress, we should see traction. Okay, in NJ Bio, in New Jersey, we have committed capital to expand our capacity there. That was publicly announced, and we have been talking, and we have actually received the first order for an integrated linker, payload, and conjugation RFP there, project that is being worked on by the team in NJ Bio. So there is traction there, and directionally it's moving in the right direction.
Okay, and just quickly then, what does this mean for guidance? Because you have that FY26, you'll see acceleration. So put a number to that in terms of growth. And then eventually your $1 billion target and say eventually 30% margins.
Yeah, so listen, we remain committed to the 1 billion, 30% margin in 5 years, 2030. And that's the only guidance I will give you at the time. Otherwise, we continue to remain focused on delivering the commitments that we have made to our customers and delivering that long-term guidance that we have shared with everyone.
Got that, Vivek. Thank you very much. I just want one thing. Those 3 RFPs that you earlier said, Is that in relation to, I mean, the US government signed an executive order asking federal authorities to stockpile critical APIs for 6 months. So do you think this is because of that?
So first of all, it's not 3 RFPs. We got RFPs in 3 different batches. The number is way higher than 3.
Okay.
It came in 3 batches. Just to give you an example, this is supply chain de-risking RFPs, very clear. They are working with other providers in other geographies, and they are evaluating companies like us to really partner with them.
So this is new stuff in that sense. I mean,
New stuff. That's exactly right. This is new stuff in that sense. You know,
all right, okay. I just wanted to clarify because I mean, if this is that 6-month thing which got a bunch of people excited, but this is much better in the sense it's diversification and it's kind of sort of new customers in that sense. Thank you very much. A bunch of more questions, but out of time, and I hope you come back on this channel and program, and we'll chat more. Thank you.
Thanks for having me. Thank you very much.
Okay.